All right, YouTube, welcome back to the Cosasverdes show. I am streaming right now at the very beginning of this private stream that is for the private community only. And if you want to check the details of that, you can click the join button that's right, should be next to the subscribe button, and hit the bell. For new viewers, if you like what you see here, I do a different type of analysis, so no time to waste. Let's jump right into it and let's go get some Bitcoin. We're going to check out what the hell is happening right here. Is this going to be a lower high? Then things come down to the bottom of the channel, or not, slowly but surely? Or is this going to prove to be a beautiful bounce from this point of control of a range that's over 6 months long? Will it take us back over 30K? We're going to really zoom in because I was shorting this line yesterday and it really gave the best signal of the entire week, and it was the same signal from this drop here. We're going to go compare them, and it was a simple rejection failure pattern, and it was perfect. But both the drops happened at an awkward time, and I didn't hit either of them, although I was in the trade for this one. Long story short, I got angry, I had to stop trading for the whole day because I was not emotionally in control. So no further ado, let's go get some freaking Bitcoin. Yeah! Yeah! All right, here we go. So we're going to zoom into here, and for new viewers, this is called a trading channel. All it does is, it's not TA necessarily. It is essentially like since you're crypto people, it's a layer 2 that goes on top of what you're already seeing, however you use the chart. And the way I like to describe how to use channels is you act like they are prescription glasses, so you can simply see price better. And you can add it to any type of stuff you hear, like any other trading style or TA style that you like. This really helps. And they're rotated rectangles. If you just try to emulate what you have here, I have the prices labeled pretty darn clearly. I don't have the exact coordinates of this box up here labeled, but that's close enough. And if you want to replicate this, new viewers, go ahead and have at it. It would probably be in play. Look, this is December, and it's pretty far above here. It'll probably be in here for over a month. If you just replicate this, you're going to have prescription glasses for yourself for a whole month or more. All right, so now let's zoom in to this area over here, and I'm going to use a different chart to do that for now, because I want you to show you a very basic way to add even more glasses. Like it's glasses on top of glasses. So you know how even microscopes and telescopes, they have multiple layers of lenses. Well, these are the very basic lenses that I suggest you put on your chart here for today. All right, so the daily open starts right here. A lot of activity happens at the daily open. A nice backfill before continuation could happen because neither of these candles really the daily candles haven't really interacted with it. This daily candle has not really, no, I'm so sorry. If today goes below both the monthly and the daily flips red, and this is a big wick, we'll realize that most local highs, even if it's a mid macro high like this, they almost always, if you have one daily candle, it's not straight down. Day's not going to close here gravestone and then tomorrow starts and it only goes up a tiny bit and stays like right here and goes down. No, it's going to backfill all the way up, right? So if I'm going to play the charts short, for example, using this basic method, all I did was I go to the daily candle and I mark it off and I put a D there. Boom. Okay, I go to the monthly candle like this. Boom, reset chart, zoom in. I mark off the bottom of that candle, like so, monthly, and I have it for each, so I know when things are flipping red. And the price, you'll see it'll act the same as these two short signals that were beautiful. So from the other chart here, I have removed the magic line, the weekly line from here, but I had it here on the chart and I was talking about it back here. And that was the weekly line that I said to free YouTube I wasn't going to tell you because it was our trade of that week. Trade up, which I did hit, a trade down, which happened at 2 a.m. I missed, and it's the same pattern. And so this is section, let's call this A and B, okay? B and A, weekly line interaction, this trend line or the 3/4 line. This is the half court. 3/4, top of the macro channel. When we zoomed out, remember what it looked like? So now you can see that this is like the bottom quarter line, half court or halfway or middle of the soccer field, whatever. Half court is a basketball reference. Sorry, not much of the world plays basketball. And 3/4 and the top. Okay, so A and B, let's look at the exact, it gave the same pattern, and it's something I talk about on my channel all the time. And my community did get those alerts. So let's go ahead and zoom in to see how similar they actually were. Since tomorrow, even if things are going to be bearish, it's going to wick up. All right, so here we go. We are going to go to the A weekly line. I'm going to zoom in here to the super micro time frames, like maybe even the 1 minute. I'm going to go to the 1 minute chart and watch. It can be easy if you allow it to be easy, right? Or if Bitcoin moves at a time where we're trading. Look at this. This is the line for free YouTube that I would not, oh, this is the wrong, Bitstamp chart doesn't show the 1 minute very well. I might have to go to like the 3 minute, but you can see here that the weekly line, this is how important it is. Watch, this is what will happen at almost each of those lines. If not each of them, like 100% exactly. You get a punch high. So when you get over a key line, there has to be a lot of buy pressure and momentum. See how much momentum these whales or the algos, or probably the exchanges themselves, or maybe a country, I'm not for sure, but whoever has massive trading desks, they purposely used a lot of volume to get over, and that's what I call a punch high. It's a concept we talked about regularly on the channel, and that's why you give a thumbs up, returning viewers and new viewers. If you're still not sure if you'd like that, don't hit thumbs up and don't subscribe yet. I want to earn your subscription, and I'm probably going to do it as long as you listen, and I speak clearly, and I don't go too fast. All right, so check this out. Punch high. Resistance, the same lines we just marked off, right? Volume. If you can't get back over that punch high and you start going under and take out lows, so high, low, lower high, lower low, then you're looking for lower highs and a rejection on here. This could have been it and it could have fallen off, but since it's a weekly line, I usually think it's going to interact with it a little bit more than, yeah, sometimes 2 hours is all you get, but a lot of times it's a whole day and the next day, right? So that was a signal, could sneak your stop in profit, get stopped out in profit, okay, and then wait for this line again. That's probably how the trade would have gone for me had I been trying to use that as my signal. Punch high, higher low, lower high, lower low, short the line at a rejection. It bounces up and stops you out, and you walk your stop down and you get stopped out, $5 extra dollars in profit, right? So that's what would have happened there with this style. Now watch. And then the next time, so let's see if this is a totally different day. It's late in the day. So essentially traditional finance ends about right here somewhere, about 4 o'clock. So when the traditional finance closed, this was essentially dead hour. It was dead hour, and then you get the signal, boom. And then, tricky, maybe you get stopped out, but you probably wouldn't want to get stopped out above that line. Boom, you had a second chance. First chance, second punch high, lower low, lower high. That's your signal. Punch high, never taken out, lower low to that one. So it broke trend. And then you're looking for the rejection, failure, rejection pattern. A lot of times it does rejection, failure pattern, and then gets just it barely, gives a signal, but it almost always gives that exact drop. Look how perfect that is. The exact weekly line. If that is not compelling, and you haven't seen this before and you're new, that's when you hit the bell or subscribe in the bell to get all alerts, because crypto moves fast. So I want to be able to deliver content to you now that I'll be a lot more active on YouTube. All right, so now the same lines, I'm not gonna go such a small chart. Here we go. So we're dealing with the same stuff. And as you can see, the monthly's green. Because why? How do I know the monthly's green if I'm not on the monthly chart? Yes, Juan. Yes, Juan, that is correct, because price is above it. Any moment that the micro candles, so this is a three minute chart. Well, how can I tell the monthly's green? Well, price is above it, right? So I'm waiting, like a bigger short signal actually would be when you have, if it comes back below this resistance line and gets rejected by both, somewhere close to here, that would probably be a fantastic opportunity, but that moment won't arise until tomorrow, Friday, April 28th, until 2 a.m. in the morning. All right, so this is kind of what I'm looking for here. And hopefully it would get rejected a little sooner, not at 2 a.m., and I can start playing this, essentially getting squeezed under here, if it happens. But vice versa, if it happens to go make a higher low to this one, So yes, this is a low, but a low to this one is 45-degree angle. It could also bounce from there. So regardless of what happens tomorrow, it's near the end of the day, like price might explode over the weekend. This is essentially what this is saying. So I can already get an idea of where and when I might want to trade and what types of, if I'm going to be snobby with a setup to enter on higher leverage, because I'm trading higher leverage as of recently, like 50x, with exceptionally tight stops using these same slope lines. But I zoom in, and so I can already tell, yeah, I'm not really interested in anything right now. I'm not going to chase this green stuff. This went below the line, so let's zoom in here. Just micro time frames connecting to everything, the bigger time frames, monthly, weekly, and everything. I mean, yeah, this kind of use this as support. So if, if I can zoom in here and kind of find the angle of the move, well, I mean, I kind of already have it. See that? Same angle. See this side to this side to this side? Look. Same angle. See that? Everything is the same. So if everything is the same, it's not actually going up until it's above that. Easy. So until it's above that, it could just chop, 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 chop. But if it does chop, is this big enough of an area for me to play? Like, do I have interest in this zone for even a long? Well, let's see. If it can put in some time here, maybe, go up here, form a higher low here, and go up, potentially, how much wiggle room would I have? Less than 1%. So in this yellow triangle, I'm going to keep it yellow. My yellow means for me, pause and wait. Don't take a trade here. There's no reason to. There's absolutely no reason. I would rather take a trade there after it fills out some time after this very volatile moment. So I'm not interested right now, and I know not to even, put my money on the line. Why would I do that? For 1%? Wait till it gets above here. Maybe if it starts going like this, and then forming some higher lows like this, and boom, yeah, I'll take that trade off the long. But I'm not trading inside of this. And I would prefer it to go under this line, back into the red triangle where I am interested in shorts. Okay? So, and in my journey to essentially trading during the daytime, as opposed to more of a day swing hybrid on 5x leverage, which is what I'm accustomed to, and I'm very highly proficient at that, I have to be much snobbier. So if you're playing charts, you got to realize the leverage totally changes the way you trade completely. So I have to be exceptionally picky with what I'm doing. And that is how I'm becoming picky. I know where price is specific to the candles. Everything is up. So pressure is way, 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 way up. I know that this local high, even if it is a local high and things tank, because of the daily posturing, I know that any short that I have today, I want to close quickly. Because if I can remove the drawing tools, now you're just going to have to follow my cursor. I know I usually use the arrow. See where my cursor is moving? I just remove the drawing tools. So if this, because this, this could be the wick high of that turns red. So if this candle flips red and the micro time frames bounce under that line that I don't have on this chart, but on the other one, then I'll probably want to be short. But because like this, it's all green, I don't want to assume that this is a lower high. I don't want to do that. So I also know that I know how to treat my mentality. I know with which mentality to approach everything. As local, and if for new viewers, if you don't appreciate local tops and everything, let's just go to any of them. And honestly, it's almost at any time frame. And this is something that that has worked beautifully the last few weeks, is just paying attention to these candlesticks and then understanding what are they saying, and then zooming in on the micro time frames, looking for punch highs, resistances, and all that to enter the trade. But you have to have the right mentality on the daily, the monthly, the weekly, right? So everything is pressure up, and I know that if this is a local high, typically highs form with multiple wicks at the top, or at least a couple, right? Here, it really didn't give the sign, but you did have the sign of if the daily flipped red, you can trade under that daily line. Even if it doesn't give you like a twin tower peaks. So none of these are really good twin tower peaks. I might have to go to the weekly, but the same thing definitely happens on the 4 hour, everything. If you see a hot 4 hour candle and you are convinced it's the top, you're totally convinced it's the top, well, you might want to wait till the next 4 hour candle makes that wick, and you'd be shorting the wick, or perhaps even the lower wick, of what will be a red candle. And if that candle never flips red, you better bail, because it's going to go up if you get 2 green candles in a row. Twin peaks. with one spacer on the weekly scale. Twin peaks. Okay, if you think something's the top, origin line perfectly came down, right? These are macro origin lines, and no one else on YouTube has those. These are mine. I made these manually, and it's not an indicator or anything. So you could see here that, yeah, you had, and then a green candle, and boom, it came all the way back up to the same place I want to short. So tops of an entire move or even local highs. Look, boom, green candle, hot. We'll wait for the next one. That is what I'm looking for. Boom. So it's kind of hard to assume that this next candle will be green until the candle's red. And then even if that candle flips red, it's the next day, you know it's the good short. So this is a perfect example. You get the twin little peaks there. Even though one's a little lower, they're not perfectly in line. Can you see that wick there? Can you see this right there? Wick, these guys. So we have a green day. So even if today flips red and I'm shorting, I know that tomorrow, you know, when the candle starts, it's going to backfill on that same line, the same slope line. It's the same damn thing. And I guarantee you, if I were able to go back this far in time to October of 2019 and go to the 1 minute chart, you would see the punch high, failure, it's all the same structure. And I would use that same in all the micro time frames. I would pick a slope line like this and I could stack it on top of all wicks and they would align perfectly. And these wicks would align perfectly. So these slope lines that I showed you at the beginning are very important, but also understanding how do local tops form. They don't form with just one red, you know, it doesn't just go boom and then it's down. This can't be the top ever. If the next candle were red, the wicks still would have gone up here. It's the next day every single time. No matter what, there are not exceptions. Altcoins, they don't follow that rule because they sometimes wait until Bitcoin finally does this and then goes down, and that altcoin the whole time, instead of this and this, you know, instead of like twin peaks and stuff, they'll just give zero signal and boom. So the closer to Bitcoin that your coin trades, the better signals you're going to get because of that. Because a lot of altcoins don't give short signals because they're going up and they go straight up, straight down without the twin peaks. But if you want to see, hey, is this a good tradable coin? You essentially go to a time frame. I would suggest the weekly and the 4 hour. If you don't see twin peaks, that means it's not a very predictable coin, and it'll turn on a dime when Bitcoin finally goes down. Although Bitcoin gave like 3 signals with the punch high, lower high, going below a line, all that kind of stuff, right? So coins that trade very similar to Bitcoin are things like Litecoin, and it's more volatile. Ethereum, right? But if you go to things like, you know, Matic and Atom actually are pretty regular, honestly, I'm not going to lie. But the vast majority of other altcoins, they can just do their own thing, you know, just clear all the shorts, go straight up, straight down, no twin peaks, absolutely no signal at all. So what I'm saying here, these methods, they only apply to coins that trade fairly in line with Bitcoin. Am I making sense? All right, so now, real quick, now let's zoom in, and I will finish up this summary here for YouTube. So now with that context, actually, let's go to the daily one more time. So now let's zoom in now that we know this for the day. All right. So this candle right here is probably not going to be a twin tower peak high. I don't see that very often. But if this day flips red, then I assume the next day I make that. So I would go to here, connect it with a line. And my next day, if this flips red, I assume it will go up and then come down to at least here. So really my opportunity to get into a short here at a lower high tomorrow and hold for more than 1 day, that can't happen until tomorrow. So if I am short, and this is the stuff we go over on the community, just I drill, because yeah, it's hard to keep all the time frames in your brain. Like it's really difficult. And I have 5.5, 6 years of practice doing this. So if I'm making this look easy, I mean, it actually kind of is, but it's hard to always remember, and it's hard to understand what it means for all time frames, right? So I know that if I'm short, which I don't know if I want to be short quite yet. But if I choose to be short today and I get a good trade that goes 1% on 50x, which is a 50% trade, for example, only goes 1%, I'm closing it because the nicer opportunity is tomorrow, period. And it helps me, like take profit and re-enter with more money, right? More confidently. And I know how long to hold it. And I know not to hold it if the next day doesn't flip red. Make sense? Now with that context, let's go down to the ultra micro time frames, the 15-second chart. Whoa, whoa, whoa. Now, I haven't gone over B. Remember B? I said A and B. Doesn't this look... Well, isn't that kind of curious? This is a totally different local high. Volume to get above what? The resistance line. Punch high. It technically took out the punch high, but punch high. Drop below, lower high. Now you're looking for a potential short. Boom, you get stopped out. Maybe at break even. Boom. Now you say, uh-oh, it's getting a little wiggly, and I'm going to wait until a beautiful rejection. Uh-oh, lower high and rejection. And you can see here that, what did it do? It stayed under that exact line. And if I move this line down like this, the lows connect to it too. It's the same crap. So where do I know to put my stops? Above that line. And if I go like this, guess what it connects to way over here? What? No way. So if you're not, so I call these slope lines. So I know exactly where to be stopped out, and I don't wait for anything. So if this type of stuff seems helpful to you, that's before I jump off of here for free YouTube, and I'll continue with the stream though. Everybody watching the stream, go ahead and hit the bell, hit subscribe, and check out the join button. That should be blue. That's below this video to check out what the community, the YouTube community is. And if you want more of a community where you can hang out and actually talk to people and their thoughts, share your screen, share ideas while you're trying to play some charts, that is what Discord would be for. And we will see you next time, YouTube.